Hello, my name is Diane Penney. I have over 15 years experience as an advisor helping people to understand financial topics. Today I want to share information to help you if you're worried about running out of money when you stop working, or if you find the ups and downs of the stock markets exhausting, painful, scary, or boring, or maybe a little of each. If you have savings in a guaranteed investment certificate at the bank, but find the interest income that these earn are both painfully small and highly taxed. If you wish that you had a pension that would pay you an income every month for the rest of your life with a solid guarantee. If some of these are a concern for you or someone you know, you're in the right place. And if you're skeptical, that's good too. I want to share both the pros and the cons about these options to generate an income in retirement. Lots of people have opinions and advice about investments and savings. Some say real estate or bonds or stocks or corporations, and sometimes they're right and sometimes not. But in the years when we're building up our savings, there's usually time to recover from a poor year. Maybe we gained 12% one year and then it fell 7% the next year. Over time, things grew, and that was good. But when we get to the stage where our income slows and we retire or semi-retire, then we need to turn our savings into an income. And that's a very different process than saving and investing, and it has less room for error. We would find it a much bigger problem to be down 7% in a year because we may have drawn out an income of 5%. So in total, we're down 12% at the end of that year, and we're still planning to take maybe 5% out the following year. That can get scary pretty fast. Would you agree? Those who were lucky enough to have been covered by an employer pension are able to retire and receive a pension for the rest of their life. They're recipients and not participants. They don't have to worry about it. They just get a check every month. I don't have an employer pension, and lots of people who are retiring or who have recently retired also don't have one. We might be eligible for old age security at age 65 or Canada pension, which we can draw as early as age 60, but for middle and upper income earners, those government pensions are simply not enough income to live on, and we need to figure out how to turn our other assets and investments into income. I want to share with you information about how you can get one of these lifetime pensions too. And no, you don't need to start a new career and work for 30 more years. You can buy a guaranteed income, which is like a lifetime pension, and it's called a life annuity. How does this work? You can buy an annuity with registered funds, like from a registered retirement plan or a RIF. You can also buy one with non-registered money, savings accounts or other investments, or even proceeds from the sale of your home if you downsize. Annuities have been around for a very long time. The Canadian Government Annuities Act of 1908 was designed to help Canadians prepare financially for their retirement by buying a government annuity. Now, the government doesn't sell annuities now, and the banks don't sell lifetime annuities. Only insurance companies in Canada can provide guaranteed lifetime income through a life annuity. The insurance companies are highly regulated and must set aside reserves for future payments. And you know the lifetime personal pensions we spoke of? Well, a single or a joint life annuity is an insurance contract that does the same thing as a pension. You pay a sum of money to the insurance company, and in exchange, they guarantee to pay a set amount of money every month as long as you're alive. In the case of a joint annuity, the money continues as long as either of the annuitants is alive. And you can add on some additional guarantees if you want that might include some years of payments in case the annuitant died in the first 5 or 10 years. Let's talk about happiness. Do you think that if you knew that there was a guaranteed amount of money that would land every month in your bank account, do you think that you'd have less financial stress than figuring out every year whether you should spend more or less of your savings and not knowing exactly how long it needs to last you. In fact, a report done by a major HR consulting company, Towers Watson, in 2012 said, research has shown that the security provided by defined benefit pensions and annuities boosts retirement satisfaction. A study in 2003 found that retirees with a higher percentage of annuitized income were happier on a cross-sectional basis and maintained higher levels of satisfaction over time than their less annuitized counterparts. And a 2011 study showed an almost 20% better retirement satisfaction for respondents who had their retirement income coming from guaranteed pensions and annuities when compared to those without annuitized income. Let's talk also about long life and longevity. You may have read that Canadians are living longer lives all the time, which presents some major challenges if we have to invest our savings and take out some each year, hoping that our money doesn't run out. The life expectancy, which is an average age for a 65-year-old, today is almost 84 for a man, and 65-year-old woman is almost 87. Now, remember, this is an average, so half are going to live longer than this. Some may be longer in retirement than they worked. So while an annuity can protect against longevity risk, the risk of outliving your money, they aren't for everyone. If you're so wealthy that you're unlikely to ever run out of money, you don't need one. And similarly, if you're in very poor health, then an annuity might not be your best option. Let's talk about guarantees. You might be wondering about the guarantee word that I've been using. Well, the first $2,000 per month of lifetime income is 100% guaranteed with each insurance company through an insurance member association called Assurus. If your annuity income is over $2,000 a month, then you can consider splitting your capital and picking more than one insurance company. Remember, a life annuity is not subject to market risk and how the stock market is doing. There are no fees to pay and nothing to evaluate at year-end. Once you set it up, it just deposits your money like clockwork. In Canada, the companies that offer life annuities include BMO, Canada Life, Desjardins, Empire, Equitable, Industrial Alliance, Avari, Manulife, RBC, and Sun Life. Let's talk rates. Has anyone ever heard that annuities aren't good, the rates are too low? Well, I'd like to cover that a bit here. In fact, for those over 65, the income is in the area of 5 to 7% higher at older ages. And at the end of this video, I'll show you how to get actual income information for your situation. Rates are based on gender, age, and the amount that you put into the annuity, called the premium. Because annuities are insurance contracts, there is a higher amount of income available because statistically all of the people who purchase an annuity will not live to life expectancy. Some will die earlier, and then the insurance company has additional money in the pool to continue to pay those who are alive. Some will live much longer than life expectancy, and they will continue to be paid for life. No other type of long-term investments can provide guaranteed income for life at an equivalent rate as a lifetime annuity. The rates are different at each insurance company as they're based on their own actuarial tables, their own results, and long-term, not short-term interest rates. If you wanted to purchase an annuity, it's recommended that you consult an annuity broker who will provide you with the rates of multiple companies, not just one, so you can choose the best option for you. And once you buy an annuity, you can't opt out of it. It's like selling your house. Someone else takes title and you can't decide that you changed your mind. So you want to take the time to ensure it's the right decision for you. Some people will purchase annuities in stages, maybe some at 65 and some at 70 and some at 75. We have access through a quoting company called Canex to all of the annuity providers in Canada and can do quotes for you. We can't cover everything here there is to know about life annuities in this one video, but there's a link below that'll provide you with additional information on how annuities are priced, the additional guarantees that you can opt in for as well. I've also included below access to details of a very important tax benefit available for non-registered life annuities, but only until December 31st, 2016, when the government will be changing the rules that will increase the taxation on annuity payments starting January 2017. Now, the older that you are, the less tax you already pay on a prescribed annuity. But if you can pay less tax every year by purchasing in 2016 versus waiting until 2017, it's like a tax sale. Click the link below. I hope you found this information to be of value. Please feel free to contact me, Diane Penney. As an experienced advisor, annuity broker, and an elder planning counselor, I try to keep clients happy, healthy, and live long lives with guarantees that tame the money monster. Thanks for your time.